Microsoft had a better year than Amazon in 2025, but will that be the case in 2026? That's the question I'm going to answer in this video, comparing these two companies head to head to answer the question, what's a better investment opportunity for long-term investors for 2026 and beyond? Amazon versus Microsoft.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So to start this comparison, I'm going to look at revenue and then return on invested capital, and then share with you my valuation on both of these companies. Let's look at revenue over the previous decade, where Amazon has demonstrated phenomenal growth, increasing from $107 billion in revenue in 2015 all the way up to $691 billion in revenue over the trailing 12-month period, most recently updated. That's good for a compounded annual growth rate of over 21% in that time. Meanwhile, Microsoft has grown its revenue from around 100 billion up to 282 billion over that same time period. That's good for a compounded annual growth rate of 12% in that time, nearly half the level of Amazon. However, Microsoft's revenue is more lucrative than Amazon's revenue because they come with higher profit margins, being primarily software sales, and software sales, as you know, have higher profit margins compared to when you're selling physical products. It's much harder to sell physical products at higher profit margins because every incremental sale comes with an associated cost of goods sold. However, looking forward, where do I think these companies will be in terms of revenue growth looking ahead? I think they both have excellent prospects. Amazon has some headwinds and tailwinds. Notably, the biggest headwind to Amazon's business is the increase in tariffs, the increase in trade barriers, which are slowing down worldwide economic growth and especially impacting businesses in the United States that are importing products for sale in the United States from outside the United States, which is a large percentage of Amazon's e-commerce business or sales of imported products. So that part of its business will be impacted negatively, to be sure. However, the other part of its businesses are thriving, especially the advertising segment, which is growing revenue at roughly 20%, and then its AWS segment, which is recently accelerating its growth, and that's the segment where Amazon has spent heavily on capital expenditures, building out its AI capabilities. So those segments will likely fuel profitability for Amazon, even though the e-commerce segment might face headwinds in the near term. And if you're an investor, you'd prefer that mix because the segments I discussed that have tailwinds are the segments that are more profitable for Amazon. Meanwhile, Microsoft also has invested aggressively in its AI capabilities. Most notably, it's one of the biggest shareholders in OpenAI, which is home to ChatGPT, and that business is growing and is estimated to be worth several $100 billion, upwards of $500 billion, and revenue growth in that category is increasing. And Microsoft is benefiting from that as it's incorporating some of the technology advancements at OpenAI into its search engine, into its Copilot, into its services that it offers enterprises. So Microsoft's cloud segment is also growing and thriving. It's actually growing even faster than Amazon's cloud segment, and that's primarily due to the fact that Microsoft's cloud segment is smaller than Amazon's cloud segment, and it's easier to generate faster rates of increase coming off of a smaller scale than it is at larger scale. Regardless, these two have excellent revenue growth prospects over the next 5 to 10 year periods, and it's going to be a close call depending on which company performs better in the long term in terms of revenue growth. It's going to be really close. I can't make a prediction on which company has better revenue growth prospects over the next 5 to 10 years because they seem equally matched right now in terms of sales expansion. The next metric I wanted to compare these two on is return on invested capital. This measures how good the companies are at taking investor money and investing it in products and services that generate profits and cash flow. This is especially important because of the large capital expenditures these companies are putting into their AI ambitions. They've both demonstrated great skill in generating profits on the capital they invest. They've been good capital allocators, with Amazon's ROIC increasing from 3.1% to 12.5%, while Microsoft's ROIC increased from 13% to 22%. They both demonstrated excellence in this regard. Microsoft has the higher number, but Amazon has the better trend. They both demonstrate great skill in this regard. It's a close call here as well. So now let's look at valuation, and I've calculated a proprietary discounted cash flow valuation for each of these two. And the intrinsic value per share I calculated for Amazon has the business worth $304, while the current market price is $234. Similarly, I calculated a discounted cash flow valuation for Microsoft, which has the intrinsic value at $481 compared to the current market price at $489. I also like to look at valuation on a forward price to earnings basis. And by the way, I'm getting all these charts from fiscal.ai, my preferred data provider. There's a link in the description if you're interested. They're trading at similar valuations here, with Amazon trading at a forward PE of 31, with Microsoft trading at a forward PE of 29. Both seemingly fairly valued to being slightly undervalued at these forward PE multiples. But Amazon demonstrated a significant undervaluation if you noticed in my proprietary DCF calculation, and that's the difference maker here. If I'm deciding between these two excellent companies, which I like both, I have them both rated as a buy. If I had to pick only one of them, I would pick Amazon as the better stock. Hey, if you value my process for researching stocks, I think you'll appreciate access to my spreadsheet containing my discounted cash flow valuations, which calculate a fair value for over 200 companies. It answers the question, what's a good price to pay for a certain stock? You can get access by joining our channel at the investor tier or above. See the link in the description or click the join button below to learn more.